What's going on, guys? In this video, I want to give you guys a very simple and basic day trading scalping strategy for trading the NASDAQ 100, trading ES, gold, crude. Doesn't really matter what you want to trade. Obviously, the only difference between asset classes is obviously your price targets, your stop losses will be different in terms of points. I trade the NASDAQ 100, which is the NQ. I also trade micros, which is MNQ. So my points, I'm pretty comfortable with how much I'm giving up in terms of structure wise and stuff like that. Now, one thing that I want to kind of inform you guys, I use what I would call a dynamic stop loss. So every single trade that I take based on, the handful of setups that I like to take on a day in and day out basis is not the same. So it's not like I'm always risking 15 points to make 20 points. I'm not always risking 10 points to make 10 points. Sometimes I might be risking 10 points to make 5, 10 points to make 20. I might be risking 25 points to make 15 points, right? A lot of times my risk to reward ratio is negative. That's okay as long as the strategy that you're using has a high win rate. Now, that's one side of things. The other side of things is just because you have a high win rate doesn't necessarily mean that you can sit there and take 50 trades a day. Okay. So, what you want to do is keep your trade count under control with the high win rate. That's how you kind of balance out that negative risk to reward ratio. Because if you take a loss, you're probably going to give up 2, maybe 3 winning trades. But if you kind of look at the analysis in terms of how much do you make on average on a winning day, let's say it's $250. Okay, great. Well, on a trade, I don't really want to lose $800, right? So I want to keep the losses, whether it be on one trade or a multiple of trades, I want to keep it between 2 and 300, 350 being the max on that particular day, because I want my days to be 1-to-1. So like I want to feel like if I do have a losing trade, whether it be on one large trade because I had to risk more points, or whether it be on a few trades that just kind of gotten chopped up, I always want to feel that, okay, if I walk away today and come back tomorrow, that winning day puts me right back to where I was. Very, very simple. So with that being said, the strategy that I want to go over is a 20 SMA strategy. Now, there's a few things on the chart. This blue line is what we're going to focus on here. And the reason why I wanted to make this video is because in real time, I was watching this setup. So notice how there's a few things going on here. Notice how off the open today, we kind of sold off. Now I got this double trend line channel here where we kind of bounced off of it. I've also got a daily 20 SMA that's kind of sitting right here in this particular area. That we're holding. So I noticed we put in a low, we had a little bit of a dead cat bounce, we came back down, we bounced, we came back down. We're holding this area, we're building a nice floor here. This is kind of telling me that, if we do start to close below this, maybe I want to turn my bias to a short-sided scalp. But I started to see that we were trading below the 20 SMA, okay, below the 20 SMA. Now there's two things that are going on here. The trade that I'm going to show you is a winner. The trade right before that would have been a loser. But there's a way that we could kind of, avoid taking this trade. Okay. And this is going to come with experience. It's going to come with discretion from the trader, obviously. But there's a reason why on this short that closed below the 20 SMA, why I would not have taken it. The reason being, and again, sometimes you'll be right, sometimes you'll be wrong. Like, for example, if you didn't take this trade, and it worked and the market flushed for 50 points, you're going to feel like, oh man, I should have just taken a trade. But I want to keep you as safe as possible. I want to keep myself as safe as possible. So there's a reason why I would never take this trade. First things first, we're still above the low of day. Okay, that's not that big of a deal, but we are above the low of day. The second thing is that I have this trend line, and I want to actually show you guys if I zoom out. This trend line is going back 2 and 3 weeks. So it's a pretty big area of demand. Okay. It's a pretty big area of demand. So by looking at the smaller time frame, the intraday chart, I know that this is a big area of demand. So if I'm getting a short position that's right into demand, I don't want to take that position. In fact, I want the better price on a potential long bounce. Okay, so that's another reason why I wouldn't take that trade. The only reason that would get me into a short position here is I would need to break this support, and be below my daily 20. Now I will flip and I will be short-sighted bias. So this strategy for scalping is very, very simple. There's a couple of things that you need to analyze, and we go over all of this in Evolution Trader. So if you guys want to join, right now, it's a fantastic time to do that. It's 50% off. You can get a whole year's worth of access for less than $1 a day. That link's down in the description box below. In this particular scenario, once we reclaim the 20 SMA, I'm going to then draw a demand zone box here, and this entire range of this candle is going to be my stop loss. So as long as we're trading in between it, that's fine. I'll sit in the trade even if I'm in drawdown. On this particular trade, I would be risking 16, 17 points. Okay, so adjust your size appropriately. The ATR on this 5-minute chart is sitting at 23. My rule of thumb for scalping is if I can make a half ATR, I'm good. So if the ATR is 23 points, I then say I'm giving up 16 points on this range. I'm looking for 10 to 13 points. Okay, anything in between is fine. Anything close to 10, 9, 9.5, 10, 10.5, 11 is all fine. Okay, I'm looking for a half ATR, and I'm looking to get in and I'm looking to get out very, very quickly. So we enter on this setup once price action clears out the wick. Okay, so once price action clears out that wick, we're going to enter into the trade long. We're going to be getting into this trade at a price point over 21,717. Now again, with slippage and fill times, and depending on what prop firm you're on, or if you're on personal account, you're probably not going to get filled right on the dot. Maybe you do, maybe you don't. But let's just say we get filled a point above, right? So let's say we're in at 21,718. If we're looking for 10 to 12 points, 5 minutes later, we shoot up to a price of 21,731. So in 5 minutes, less than 5 minutes, you would have taken 10 to 12 points on this. You'd be in and out. This is an example of a very high win rate strategy if you don't get greedy. There's a lot of times where traders will see that and then they will back test the trade and they'll be like, man, I only took 10 points on this trade and it went up 50 points. I could have held for more. And when you start trying to adjust a scalping strategy for a much higher R to R, right? Like a much more greater return on your initial risk, that's when things start to get screwed up. Stay in your lane, know your role, like just respect the fact that you're a scalper. You're not looking for 50 points on every trade. You're looking for 10 to 20 points. You're looking for 10 to 15 points. If you can do that over and over and over and over, what's the problem with that? What's the problem with having a 70 to 80% win rate? Again, another thing that screws a lot of people up is they tell themselves in their head that, hey, my strategy works at 75%. So for every 4 trades that I take, I'm going to win 3 and lose 1. Or if every 10 trades that I take, I'm going to win 7 of them and I'm going to lose 2 of them. I can just trade all day and I'm going to make a bunch of money. Wrong, because sometimes you get put into a predicament where the range of the setup is much larger, right? Making your risk to reward very negative than what you're actually looking to make. And if you win 3 or 4 trades, great. But let's say that next trade that's a loser is double the size in terms of stop loss. Boom, you automatically wipe out all of your winners. So the whole goal, the whole game that you're trying to play here is I want to keep my win rate percentage high, but I don't want to overtrade. So I need to keep my ass in check and just continue to, pick off 3 to 4, 3 to 5 trades a day and then end on those results. Keep my losing days around the same size as my winning days average. So if you average $300 a day on the green side normally, then you don't really want to have much larger than a $300 loss on a trade or a $300 loss on the day. So keep it kind of 1-to-1. Hope you guys enjoyed this video. Again, if you guys have been curious or if you guys have been interested or on the fence about joining Evolution Traders, right now it's 50% off. You can have that opportunity. That link is in the description. Also, Apex is still 80% off. So if you guys need evaluations, you can use my code. My code is DAnthony. It's at the top of the screen. Again, I will see all of you guys on the next trading day. Trade safe, stay under control, and I'll catch you guys all next time.